Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Ketan Ramachandra, and today we delve into the intriguing question: could the Bank of Japan intervene in the foreign currency markets once again? Let's explore. In the latter half of 2022, the Bank of Japan, otherwise known as the BoJ, made waves in the currency markets by intervening to support the yen. This move aimed to counteract the yen's depreciation and stabilize the currency amidst global economic uncertainties. Back then, in October of 2022, dollar yen hit a high of 151.94, coming within a whisker of 152, and the BOJ stepped in to intervene in the open markets. With the yen significantly losing its value versus the dollar, its exports and tourism sectors benefited, as these segments become more affordable for overseas importers and foreign tourists. However, it made Japan's imports much more expensive and reduced the spending power of the Japanese consumer as well. Thus, the BOJ had no choice and needed to act to halt the devaluation of their currency. But how exactly did they intervene, and what impact might it have on currency markets? Right, the central bank has various tools at its disposal, including direct intervention through buying or selling currencies, verbal intervention through public statements, and indirect intervention via monetary policy adjustments. Let's expand a little further on the three tools. Firstly, direct intervention involves the BOJ selling its foreign reserves, such as US Treasuries and US dollar, and then using the proceeds to buy the yen in the open market to strengthen its value. Conversely, selling yen and buying other currencies weakens the yen. Second, verbal intervention entails BOJ officials making statements to influence market sentiment and guide currency movements. And finally, indirect intervention could involve adjusting interest rates or implementing quantitative easing measures to affect currency flows. The BOJ combined verbal and direct intervention measures back in October when they directly intervened in the open markets by selling its foreign reserves and using the proceeds to buy the yen in the open market to prop it up. In addition, the central bank also supported the direct approach with verbal rhetoric along the way. Now, let's fast forward to 2024. We once again find the yen significantly weaker, with dollar yen breaching 160 briefly in April, where it lost nearly 14% or 1,939 pips at that point. The question arises: could the BOJ resort to intervention once more? The possibility looms large, given the central bank's history of proactive measures to manage currency fluctuations. Regardless of the method, BOJ interventions can have significant repercussions on currency markets. It can lead to short-term volatility as market participants react to the central bank's actions. However, sustained intervention may alter market expectations and influence long-term currency trends. In conclusion, the prospect of a BOJ intervention in the foreign currency market once again raises intriguing possibilities for currency traders and investors. As we monitor developments, we must remain vigilant of the BOJ's actions and their potential impact on global currency markets. That wraps up today's episode of Intervention by the BOJ, where we explored the intriguing question of whether such an action could take place once again. Join us next time for more insightful discussions on finance and the global economy. In the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.